Another episode of the Lepus Proprietary Trading Podcast.
Yep.
Okay, so
Let's
Richard
go.
Jackson, as we know,
Yes.
and Sonia, welcome. Yeah, so two great traders, actually, both doing very well. As we all know, Richard's doing very well, but Sonia, being a female trader, is definitely one of the stars of Lepus Prop. So we just came off the back Brisbane event up here, which was excellent. And yeah, it was a lot of fun, wasn't it?
Certainly was.
It was.
We went through order flow,
Yep.
footprint, cumulative volume delta. So get right up in there into the advanced stuff. Obviously, everybody starts off at the ground level.
Mm-hmm.
And everybody knows that my story is we can't get away with one trading strategy or one point of view, one framework. We have to have multiple frameworks, understand what the herd is doing, understand what everybody looks at. So it's have the complete picture. There is a lot to it, but it's like driving a car. You tend to faff around a bit when you first start learning, but now you just jump into a car and drive off because it becomes intuitive. And once you've got that learning under your belt, then it's all intuitive after that, and it just becomes natural.
Yep. Excellent. So today's discussion is going to be a really good one because we have the opportunity here where we've got two great traders. I think we can have this discussion is going to be about, okay, what makes a trader great? Okay, there's going to be some differences with great traders. They're not all the same. They're not all built the same. Even if they are trading the same approach, there are going to be some differences. It may be whether it's in risk management, whether it's in journaling, or even in the way that you actually developed into becoming successful traders. You know, there might be some similarities in the paths that you took to get there and to actually growing your account and becoming, you know, okay with the risk and trading under pressure. But there might be some differences there as well. So if we can highlight some of those consistencies in growth as a trader, I think that would be something that's valuable for anyone that's developing, you know, to sort of be on their way, regardless of the approach that they're taking.
Correct.
So yeah, I think that's that'll kind of sets the frame for today. I would love to start the conversation talking about female traders. As we're saying, it's in International Women's Day yesterday.
Yes.
Trading is largely male dominated still to this day. You know, Sonia and I were talking a little bit off camera about that and how she developed into becoming a trader. Would love to talk to you a bit about that and how, you know, you sort of got into it all. So tell us.
It was only 2 years ago, and I've always been interested in the markets. I suppose starting to push retirement, and I had some equity there, and I thought, well, trading is trading. When I was younger, I used to sort of buy and sell truckloads of sheep and cattle, and I was on a farm, obviously, and would raise those up and resell them. And so that was my basic understanding when I leapt in with life funding, myself. And I was buying and selling, it was just Australian stocks then, and it was up and down like a yo-yo. And then I had a runner, which was the first one I really saw. It was an ADR, which went from $4, and I chased it through to about $16 that day and closed it.
Well, what about?
I thought, that's it. I thought, I don't know what I don't know. Okay, I had no idea. So fortunately, I recognised it. I was lucky with that. So I looked around for courses and came across options. And I did a couple of very long, very involved courses with options. One of them was about 300 hours and lots of quantitative analysis and
Not
macro.
technical.
Yeah, no technical.
No technical, so it was all
Like,
fundamentals.
all fundamental.
Okay.
Yeah, basically there was, they were of the opinion that you basically had a quick look at technicals in terms of when to jump in, and that was it, but that wasn't taught at all.
But on a fundamental level, then that's more longer term trading, right?
It was 20 to 60 days options, all options.
So you have to go down to technical level when you're starting to do day trading.
That's right,
And
absolutely.
then it just swings, things like that. You have to.
When I started with that, I had a very good mentor, and they also had very interesting risk sort of set up that you'd go on 5% portfolio life. And it actually, it went well, but personally I wouldn't ever recommend the 5%. I think it's
Too much.
I think it's too much, and you know, I was lucky it went exceptionally well for me, and you know, didn't blow any accounts with it. I was interested in the technical side of things as well, because when I was looking at it, I was going, it's not just fundamental. It's not just technical. You need to know what's going on in the world before you dive into charts, and you also need to know what's going on for that particular stock or indice before you go into a longer term trade. So I was pretty keen to learn both, and then I came across Richard, and I came across a UK company at the same time. So with Richard, I first met you at the seminar down in Sydney, and that was excellent, really good. And I've been pretty much structuring my days around watching what you're doing in the evenings on the DAX. And then I also trade at night times on the US Open. So it's been busy, and it's been a really long learning curve. I'm very fortunate in being able to be full-time on that now. So it has come together, and I'm really looking at the day trading, the shorter term trading, taking over from the longer term.
That would be because you get the results a lot quicker than waiting 60 days for these longer term trades. I mean, in a 12-month period, those longer time style trading strategies, it just takes so long to get data to really believe that you've got the edge. When you've got day trading or really short-term swing trading, let's say 48 hours in and out, then you know that you can build the edge of the house. You know where to improve a lot quicker than you do with you may just have gotten lucky on some of those trades when you're holding them for way too long, right? So, when guys come to me and they go, "Oh, I've got a 4-hour or daily type strategy," well, that's kind of not suitable for us, because we want to know that you've got the edge of the house yourself, or you've got an edge, so that we can, improve on it, build on it, whatever. But if we're doing it over 4-hour dailies, I need a lot more trades than because I've got to know who you are, what you're doing, right?
Absolutely.
And it could take years for us to get to that stage, right?
Yes.
Especially if you haven't already recorded your trading data, you've just kind of got a statement, you haven't got images, you don't have a strategy, like hardcore strategy written down, things like that. So, then what is it? You're just guessing, or do you actually have a strategy, right?
With the longer term ones, I think, yes, you definitely have a strategy with the options.
Yes.
And you go into a huge amount of detail. I mean, I would honestly, when I started, spend a day researching a company, going through books.
But were you recording
going through all of that?
each of those trades?
Everything. I have 12, 15 pages at times before I put a trade on.
Yeah.
So all recorded very well. And it did seem to work pretty reliably. However, I think the further out you go in terms of time frame, the more momentum you want behind the market in a set direction. Now, last year we had an amazing market. Okay, I mean, you could have thrown a dart at a heap of stocks.
It's not hard when Trump's talking, is it?
And gone, and when it would have gone well. At the moment, we don't have that. We've got a kind of capping and possibly rolling over a little bit. We don't even know that yet. So in that situation, the further out you go, the harder it becomes to, I'm not going to say predict, but the lower the probability is that your assessment is going to be correct.
Yeah, correct.
Whereas what I enjoy with the DAX, with shorter term day trades, is you're in, you're out, you've done all your work before. So before you go into the market, you have you've looked at what type of opening you're more probable to have. You've looked at what factors are affecting that indice or so for the day. And then when you start, those first few minutes are confirming or denying what you've been
correct.
Having the probability for. And then you can get on with your trades, and then you're done. So
and how long is that actually?
Half an hour.
Half
Seriously,
an hour.
yeah.
And that's like a lot of people sit there and go, "Are you serious?"
Yeah, no,
you can make your money in a half an hour, which is what I mainly do. You make yourself $5,000 in half an hour.
Yes.
And you've done 15 minutes of prep, so that's 45 minutes all up. Maybe an hour. Let's call it an hour and a half.
That's it.
That's pretty, but you've got to be good. That's the thing, right? There's no, obviously I could do it
Yes.
because I know what I'm doing,
So,
right?
yeah.
You're on your way,
Slowly.
slowly
Yes.
on your way,
Yep.
and we've got traders that can do it already,
Yeah.
right?
Yeah.
So it is a thing,
Absolutely.
but you know, you can have a life,
Yes, you can.
right?
Yeah.
So on that note of preparation, you know, trading, because when you do that, you're finding yourself suiting more to day trading, suiting more, you know, due to the time zone and a range of different things.
Yes, I am.
Yeah.
And I'm also learning those slightly longer trades on equities at night. And a big shout out to James who helps me with that. But so that's working. I'm, you know, live capital at the moment on the DAX. I'm also am on the options. I'm still getting to trust myself with doing that with the equities at night. The hardest thing for me is narrowing it down. I really love the market. That's the hard thing. And even if I have a day like I have had, you know, this week where I've been a bit fluish and I won't trade, but I'm still understanding what's going on in the market. And I really, really enjoy it. Really enjoy it. So the hardest thing for me is narrowing it down. I think my temperament is most suited for day trading. In a lot of ways, it makes the most sense to me. I think that when everything is flowing pretty well, then you can over, obviously, you know, a week or a month or so, your average return can be very good. And anything that stops that is in yourself. It's not in you know, what's available in the market.
That's interesting because what I'm seeing here, right? So Sonia's obviously coming to that stage where she's got profitability in certain areas of her trading with live money, but at the moment she's deciding what type of trader she wants to be, and she's reflecting on her temperament as a trader. Did you go through that development yourself and look at different styles of trading?
There's when anybody starts trading, you have to go through that period of discovery, right? And there is a lot of discovery to be had. Okay, you know, you can't just walk straight in and I give you a system. You won't. You know, you just can't be a Richard Jackson, right?
No.
You've got to learn all of the aspects, the framework, and all those sorts of things. Then you've got to ask yourself a very important question: who am I? Right? Holding a mirror up in front of yourself, and a lot of people don't like doing that, but unfortunately, you have to have that mirror up in front of yourself so that you can go, okay, well, I am, I don't like I do get anxiety when I'm in the market for too long. So I do find that I jump out too quickly.
Yeah.
Or I'm moving my stop loss to, I'm not letting it roll over and have a little bit of a, breathe and get rid of that noise. We've got to isolate, are you more comfortable with looking for, 100 points out of the DAX, or you look comfortable with, like me, everybody knows my personality, and I openly tell everybody what my personality is high win-loss ratio, and, 1:1, 1:1.2 system R. Right?
Yeah.
In, out, done, see you later
really
type of thing.
Yeah.
Right? But I use high volume, right?
Yes.
Some guys want to use lower volume, right? And, go for the 50, 100-point runs, okay? But they've got to, it's a balancing act, right?
Yeah.
You're going to expect a lower win-loss ratio if you go for a higher system R, okay?
Yeah.
So I've got my advice to traders out there. If you're a new trader, go for the high win-loss ratio because you get the pat on the back, okay? You feel as though you're doing something right.
Yeah.
And when you become more and more experienced, then you can start go for those runners, okay? So you've got to say, the other thing that's very important is your personality. When you become more and more experienced and becomes intuitive and you really get used to it and you start trusting what's happening in there, your personality will change, right? So what that means is that you might start off on taking all these little clips out of the market, cool. But when you become, like recently we've had this Iran thing going on, right? And we've had massive moves in the market across the board, right? So when you're getting, when you're used to it, you get really experienced with it, we can go, okay, well, we know that Trump is doing this, right? We've got the volatility, so let's hold on to this thing longer and really take advantage of it, right? I think on Tuesday last week, I made 13 grand in about half an hour, right?
Yes.
And that counteracts all the smaller days. Okay, you know what I'm saying? So, but like as you asked just before, you've got to find your personality within the market. You can't just fully copy somebody. You can find your framework of what needs to happen. Now, some traders as well will be, they'll go, okay, well, I do like just doing the swings, okay? Looking at 1 to 2 days in the market, and I'm going to do that on FX or gold or whatever it might be, then that's their personality. And even if you could start there, if you want to start there, then shift over and give that a go. It's part of that discovery thing. You're not only got to play around with all of the indicators and find that most of them don't work anyway, but have a play, right? You've got to play with it, right? Just
realize
for yourself.
Not on real money.
Yeah, correct. Not on real money, all demo, right? Yeah, absolutely. Anybody starting trading, always start with demo, never jump into live. Everybody goes into live.
Don't just
too quickly.
Don't just win your first trade and be like, oh, hang on a minute, I could have made 10 grand.
Pull the handle, pull the money goes out, right? But you'll go through just lots of discovery at the start. For me, I'll just keep guiding people in the right direction. Give them my honest, whether it's BS or not BS. My honest opinion, but you've got to find your own personality.
Either way, it's introspection, and if you're going to do that I'll help someone with that. It's more like you've got to do the work. You can't force introspection on someone. All you can do is say this is something that you need to do, and then it's up to them to really like you said, put that mirror up, which seems to be like something that you just honestly have naturally. You've been doing that since the start of your journey, putting that mirror up for yourself. Yeah. Even when you were saying, you're feeling like you had the flu, you opened the charts, you said you took that trade, you got hit from the spread, you didn't look at the spread, and then you're like, nah, I can't trade today, out.
Yeah, I cut it. I did that because I went through everything and I went through all the macro side, and it was actually a really nice trade, but I missed something. I always look at the spread if I'm not, yet in the opening hours, and it was a Forex trade in the Asian session, and I opened it without looking at the spread, and I looked at the spread, and it was actually my stop loss, and I went, you're out. Yeah, and I just closed it because it didn't have much room to move against me because that was already pretty much taken, and I thought, right, you're obviously not well enough to be trading. Yeah, so. And I really shouldn't have taken it in the first place. That's the thing. So
but that's a learning curve. Right. That's the thing I always say to guys that, the errors won't necessarily stop. Right. I still make errors. I'm 20 years into this. Yeah. But they become less. Yeah. The second thing is that you've done the error as soon as you've done it, and you know what to do. You're not sitting there like a deer in headlights going, what am I doing? And then you try and fix it while you're in it, right? You know exactly what to do. And that usually is, and you did the right thing. So when you make an error, exit. Yes. Wear it. Yeah. Yep. Learn from it. Yeah. And then go back to what you're supposed to be doing, right?
Yeah, that's right.
When you're sitting down at your desk and you're not in the right headspace, you've had a fight with the missus, or the dog's bitten somebody, or whatever it might be, right? Had a car crash, you're feeling sick, you've got a cold, don't trade. Don't do it.
Yeah, absolutely.
It's okay to do nothing, right? Yeah, absolutely. Because I can guarantee, there's one thing I can guarantee you, is that the market will be there tomorrow, and it will do exactly the same thing that it's done for the last 2,000 years.
Yeah, that's right.
And the opportunities will be there.
Sonia, let me ask you this. How many opportunities do you think is there in one day session on one market?
Many, many, many. Yeah,
many. There's many. And all we have to do is get one or two of them.
Yes.
That's right.
It's mind-boggling when you look at it like that. Yes. It's like we don't have to dominate the market. We don't have to own every single thing or take every single swing from the top to the bottom and all that. We just have to go in there, take what we want, treat it like an ATM, and then leave the rest for everybody else.
Yes. That's right.
That's it. So simple. Yeah. Don't get greedy.
No.
Right?
And I think the wisdom in that as well comes into time frames and looking at the type of market you've got in front of you. I mean, there have been days when you've traded really well, and I've gone through and I've looked at the DAX, and it's been this little consolidating range, and I've gone, no, I don't have the skill yet to be.
Yeah.
To
So
be
you've
doing
exited
well on that.
yourself,
Yes,
right?
yeah,
So you
yeah.
know where your skill set is, you
Yes.
know your maturity level with it. And then you've gone, okay, that's, I'm not going to compete with Richie,
No,
right?
or with the market.
Or with the market, just because, I see somebody else doing it, you be standalone and act as an individual. Yes?
Yeah.
Yes.
Yeah.
And I think learning when not to trade, for me, has been one of the harder things.
Yes.
And I think that, that goes back to, I suppose, when I was young, you had to be busy being on the farm, you had to be productive. And the most productive you can be at times with this
Is doing
is
nothing.
picking your markets,
Yeah.
picking when the right time is to trade, and the rest of the time knowing when not to trade.
Mm-hmm.
I worked in roles where risk management was key, and really knowing how I felt at that time was key. And I think where I've been really fortunate is most of the time, if I'm trading, I'm normally very, very relaxed, and I'm able to switch into that zone really easily.
Yeah.
And I'm very aware as soon as that changes. If it changes, I generally stop, because otherwise you can overtrade. Or the other thing is too, if you can start off in a great market and it goes so well, and then you're getting into that later time in the day in Europe.
After the initial open.
Yeah, after the initial open.
Goes quiet.
And the
you
market
screw it
goes
up.
quiet, and you need to know, you need to see when that's going on, and that's when you stop. Otherwise,
That's another key thing that a lot of guys miss, is that you got to understand session time. Then the timing that goes, who's the players at that point in time.
Yeah.
Have all the opening guys gone and done their run, reset the price on it through to an imbalance, to a new balance area. And if we come into that new balance area, their lunchtime over in Frankfurt,
yes,
then, cool. Right. They're all at lunch.
Yeah.
They've all made their move. They've made their money. So this goes sideways. It's just all of these tiny nuances to save you from
giving it back.
giving it all back.
Yeah.
Right. But there's also mechanical stops that we can do as well.
Yes.
Guys who have got funding with me, they've got a 2% drawdown. If you're not reading it right, you go down by 2% in a day, you're done.
Yes.
Right. Even if you, and this is another one, I set this with another trader the other day, is if you've got an equity curve, he made 5%, he ended up doing exactly that and gave it all the way back to zero.
Yeah.
Right. So if you go equity high, draw down 2% through in the day. So let's say you make $5,000. If you come back down by if you come back down to 3, you're out. You've got to close the lid. Right.
Even intraday.
Because what that means, even intraday, because what that means is that you're still up for the day, just leave it, right? And so that you're not reading it and handing it all back, right?
Yeah.
At least come out with something, right?
Yes. Yeah. That's
Yeah.
actually a really, really good point
Yeah.
as well. And the other thing too, I mean, what works in one type of market or one strategy, I've learned you can't take that with you to another one. And I learned that on the US Open. I used to like that, not right on the opening candle, but pretty close to it with options. And I had two losing trades in a row with equities doing the same thing, and I went, okay, learn. So
learn from your mistakes.
So and you have to shift your rules, you shift your hard rules as those things become clear, and hopefully you can do the experimenting on a paper account rather than on a live one. That's the important thing.
Yep.
Yeah.
You've got to transition slowly
Yes.
into live money, because a lot of guys will go too big too soon, and they don't realize that even if you're really good on paper trading or small account, if you start increasing your account too quickly or too rapidly, your emotional behavioral state will ruin you. Okay.
Yeah.
Because things change, and this is going back to holding the mirror up in front of you. You've really got to be able to recognize the difference between you being calm, centered, process driven on a demo and how your behavior changes on a live.
Yeah.
Right. Now, what I do with a lot of guys out there, or got the guys training with me, is I get them to go, cross back and forward between the two, right? Do 1 week of paper trading, see how you behave, right? To go to live, see how you behave. Go back to paper, see how you behave.
Okay.
So you can really pick up on those subtle changes that you do and feel how your anxiety increases when you go into live trading, right? And what your level of calmness is when you're paper trading, because we have to match your behavioral state and your mindset, psychology, as when you're doing it like that on real money, right? And the idea is to have disassociate your relationship with money.
Yes.
Right.
Yeah.
This is why we banned anybody talking about money in our community. Right. We talk about points, pips. That's it. Right. And risk. We don't allowed to talk about dollars. Okay. Nobody shows off their bank account.
No.
I might do it every now and then.
That's
just to show people that it's possible.
Yeah.
To remind people
Look, I think
which
that's good
direction they're going into.
And it's coming from a good place.
And that's coming from a good place.
Absolutely, no
But
problem.
what we don't want to do is have our community is certainly and 100% not a show-off fest.
No
way.
Right?
Not at all.
It is a learning community of learning so that people can understand why they got to. So if somebody goes, I just made 50 points, they have to match it with an image of show us what they did and how they did it.
That's the rules.
They're the rules, right?
Yeah.
So because don't put up how much you made. We don't care.
Yeah.
Right? We care how you got there, right?
Yeah.
What did you do so that I can learn from it and maybe I can copy that next time when that pattern comes up or I see that type of trade come up, right?
Yes.
So that is so important. And, if it's the people are putting up their P&Ls and all that sort of thing, it's just going to drive other people nuts. Nobody cares about it. It's not an environment that we want, right?
And no Lambos.
No Lambos, no trading from helicopters. Oh, they crap.
Let's talk more about that trading under pressure, because I think that's it's such a great. That was a very interesting training exercise. Flipping from demo to live money, back to demo again.
Yeah.
There's other things that I know that we've done to for exercises that are in place to help people to move into trading with not just live money, but funded money and larger accounts. For example, like the trading competitions. They're a great way for people to which were done obviously internally, but I guess anyone can put themselves in that environment where you have to track your account by a third party
So you
software.
can't lie.
So you can't lie to yourself. You can't just delete the account, and it's all there. You've got to face the music every single
everybody
trade.
submits the third party analytics tool to me before they start.
Yeah.
And I watch it for the entire month, and everybody knows that I'm watching it.
Yeah.
Right.
Yeah.
So they have to be on their best behavior. Everybody has said to me, and you can back me up on this if you wish, is that they learn the most out of doing the competition because they see instantly how their behavior changes.
Yeah, that's right.
Right?
Yeah.
Okay, and this is what we want when we're funding traders is we are going to introduce pressure. Yes, we are. But it's like anything. You put yourself into a situation where you're uncomfortable enough times, you will become good at it. It's like public speaking, right? I hated public speaking when I was younger. Like I could not wait to be standing in the corner room and nobody looking at me, right?
And now look at me. I've got
look
a
at me.
camera in
Now
front of
I'm
your
stuck
face.
in front of-
do this video, do this
I did a webcast of 500 odd people, and now I've just done a seminar for a full 9 hours speaking in front of 70 people. So, I'm getting used to it, right?
Yeah.
And even if, and this is one thing that benefits me, I have to sit there every night and trade in front of 60, 70 people, right? So imagine the pressure that's on me, right? So the more pressure you put on yourself, it's going to be wrenching at the start, but the more times you practice it and do it, the more you learn.
How did you learn to trade under pressure and perform under pressure as a trader?
I'm still learning every day.
Yeah. Of course, so humble with it, but I know that you've come a long way.
I am really learning every day with it.
Yeah.
With options, I was on the deep end. So, you put in 5K at risk to start. That was where I started. And because I didn't know anything else, that was what I was trained to do. I do have confidence in that system. And it worked very well in that market. But coming back to a paper account, that worked really well. And then I got to a point where I was going, I wonder if I can check this, and I wonder what happens here. And I started really just experimenting a bit too much on it. And I thought, I actually need to put some money in and stick to things. So I did that. And that didn't make it, to be honest with you, I didn't really feel any different with it. It might shift for me, I think, when I have other people's money, because I'll be probably I'll probably be more protective of that than one. So it's really just going to be absolutely systematic.
Yeah.
I think that if you're feeling anything when you're trading, when you go into a live account, I think probably bring it back to a smaller one. You need to be
you've got to be willing to lose it on your first goes, right? So, $500,000, it's not going to change your lifestyle type of thing, right?
Yeah.
But at least you're putting that little bit of pressure, right? But one thing you don't want to do is have an expectation that as soon as you go into live, you're going to start making heaps and heaps of cash, right? You're going to have that. It's almost guaranteed that your performance will decline, right? Because of behavioral changes that you make on an account. So make it small so that you can really feel it and really recognize what's going on. Okay?
Yes, and record everything. I still tend to use a pen and paper for quite a lot of stuff, because I find if I, especially the pre-market side of things, it just works for me to write it down. And if I'm looking at putting trades on, I'll quite often be writing down sort of why and the reasons, and also a quick check in terms of how I'm feeling. That's all part of it.
Awesome. That's really good. So highlighting the commonality there for anyone that might be just listening to this in the background. Both of the traders here recommend going from demo to small live, putting yourself under the pressure, back to the demo again, noticing if there are any changes behaviorally in the way that you trade, and being introspective. That's definitely a commonality between these two successful traders, which is awesome. So next section, if we can talk about supporting community as a trader, because I know that's something that you've brought up now even several times, even in this conversation, developing, and it's something that you've taken very seriously, and having supporting community that you've built now as well. It's definitely a topic that's worth touching on. How has it played into your role even before you had your community? I would say we'll start with you, Richard. Your development as a trader, was it a big part for you?
Well, when I started off trading, I tried to do it all on my own in my bedroom, and it just did not work.
Did you ever try that?
It was actually I had a year before I met another trader in the flesh, and actually believed that they existed.
So that was similar to me.
Yeah,
same thing.
So when I learned the options trading, I had a really good mentor. I'd speak to him once every couple of weeks, and that was really good. But that was the only contact I had. And I think I'm of the generation where leaping into, other communities and Discord communities probably isn't the first thing you think about. So I was really just reading, studying, going through all the analysis every day, and I went head down, tail up. Part of the reason is that I absolutely hate statistics, and there was so much in terms of fairly deep analysis with that, that I remember Max said to me, "Why don't you just take it a bit quieter?" And I said, if I don't stop at the course at this point, I said, I won't pick it up again. And I just went head down, tail up. So I went from there, and I had nearly a year of that. And then I discovered that Richard was actually on the same continent, which was amazing. And at the same time, I'd contacted a group in the UK, and they're my other trading family, and I'm over there a couple of times a year, which is great. And it's been wonderful. Been very blessed having that trading family here as well now, and meeting other traders, and discovering the other day we've got some others in Queensland, which is fantastic.
Correct.
I did look for meetups, and there isn't a single meetup group to do with trading anywhere in Queensland. So that was my attempt in the first year to reach out and find others. But it is hard on your own. I think you need to be I think you either need to have a real passion for the market and be absolutely determined, which I was, or it's still a very lonely journey at that time, because when you go to talk to people who don't trade about trading, you see them glaze over, and after you've done that a few times, then
They don't want to talk
you
to you.
just don't. You don't bother talking. You don't really talk about it a whole lot because it isn't really understood.
No.
And there are a lot of misconceptions.
Well, it's so detailed
Yes.
that unless you're talking the same language with somebody, you can't. It just takes too long for them to understand what you're talking about.
Yes.
Imagine trying to say, talk to somebody about, even market profiling by J. Peter Stadelmeier. They're like, what, who, what,
No.
that type of thing. So
Differently.
it's very important that you've got to have the same. And this is why what I wanted to do with what we're doing is obviously everyone goes through the program, and then we can all talk with each other 24 hours a day, 7 days a week.
Yeah.
It's through the online.
Yes.
And then we all catch up. We've even got the catch ups now.
All the
There's
time.
people,
Yeah.
all of our guys. It's not me there. It's other
Traders.
people organising catch ups to
Yes.
talk about it.
Yeah.
So you've got like-minded people talking about something that they understand. You can actually have that proper banter
Yes.
instead of trying to explain something to somebody who has no idea.
Yeah,
Right.
exactly.
And they're always going to get negative out of those type of people, right?
Yeah.
This one,
Fearful
what
of
we're
understanding.
building here is positive feedback for everybody.
Yeah.
There are, rules around that as
Yeah.
well, that we always want it to be positive, upbeat, supportive, learning, that
Yes.
type of thing, rather than show off egos.
Especially in Australia, I feel like, like you were saying, there's nothing in Queensland. I found the same in Melbourne before I met Richard. I was like, I was trading for half a decade before, like just around the corner from Richard, and I'm like,
You didn't even know.
I was trying to find where are the traders, same thing, and no one in my family was trading, or none of my friends were trading, nothing. So I was like, where are the traders at?
Yes.
But there are traders here in Australia, but
There are.
you do have to hunt them down. So hopefully this is a bit of a platform for people to help at least know that there are traders out there if you do feel alone.
They do exist.
And
They do
it's so
exist.
good. It's so good meeting them and having that community.
Yeah.
It really is. It's
For
great.
sure.
Yeah.
Did it ever play a part in your development though, having traders to talk to, or even having I guess people that were in different stages of development?
What I first discovered is that when I first went out there, it's like, somebody's got an opinion of the market. If they've already established, they're not really, you're just talking at each other.
Okay.
Those people that just talk at you, and then you're trying to say something and they're not getting what you're saying, and vice versa. That type of communities doesn't really help.
No.
Okay. Especially guys that are, they've been in banks, or, they've got a different way of trading, they're more swing long term, whatever it might be, because there's so many different ways of doing it, is that you'll tend to just be talking at each other, and that's pointless, right?
Right.
So this is why, everybody's got to kind of understand the way our framework,
Yes.
and then we can all have a constructive conversation,
Yeah.
right? One where we're actually feeding off each other instead of talking at each other.
Fantastic. Good. All right. Next thing we can discuss is in relation to risk management.
Yep.
Because I think the reason why I think this will be an interesting discussion is because you have two traders here that trade very well, with overlaps in styles, but I think, there could be some differences into the way that you approach risk, not just on a standard day, but how you might approach risk on a good day. Do you lean into trades further? Do you increase your size? Do you keep things static? And even bad trading days, how quickly do you shut things off? How those risk rules work. So,
So I know what you're going to say.
I know, Sonia, you have an approach, so let's
Okay, it
take it away.
depends on what I'm doing. If I'm on the DAX and I'm doing very short trades, then I'm not looking for huge risk rewards, because you don't have the range in that candle or that time frame. So I will set at that point, across the board, a maximum of 1%. On those trades, I'll quite often use limit orders on a 5-minute and a 5-minute chart. I do have I quite often have a tick chart running beside me, and I'll be looking at that. I think I'll be changing that now, probably through to a 1-minute footprint chart.
Yeah.
And it just gives you a bit more of a handle on what's happening within that 5-minute candle.
Mm-hmm.
For a while, Richard was saying no 1-minute charts. And of course, me being an experiential learner, when I was still on paper, I had to try that. And I now work on the 5-minute as well.
Yeah.
And that's my smallest time frame with that. I have liked seeing on the tick charts where things speed up or slow down, where you start to get a bit more of a drive in a certain direction. So that's why I've tended to do that. When I set them, I'll set a limit order, I'll set a take profit, and I want to see it going in my direction very quickly. On those short trades, you're in and out sometimes in seconds.
Mm-hmm.
So, and if it's not going in my direction, I don't mind cutting it. So I'll cut it off pretty quickly.
Okay.
If I am in a longer trade, say a Forex trade, and I've got a consolidation area, and I've set a stop loss at, maybe I'm expecting it to go short, for instance, and stop loss just above. Once that trade starts moving in my direction and I can close the stop, I'll go into it strongly. So I will go back in with another position added, and then I will wait until I can close that stop, and I'll keep doing that, and I can get a few positions in there. So, and that's where I think you can get the really good returns. So it's still something I'm perfecting. I've still got a lot to learn with it.
But a bit dynamic with the sizing there.
Yes, yeah, but it's not so much dynamic with the sizing. It's a case I've only going to that 1% risk.
Okay.
Yeah, but I'll put more trades in.
You stagger it.
I'll stagger them.
Okay. Yeah, to sort of get the average price. Okay, all right.
No, we don't average too much.
Well, your approach is a little bit different there, isn't
it? Hold on, when you say average?
Well, you get an average price over multiple positions. You might
in and out.
If you look at it like that, yeah, to me they're separate trades.
But you're separate, all separate trades. You're
Yes.
not actually looking for dollar cost averaging.
No, they're separate trades.
Yeah.
And I'll only put the second one on once the first one is closed.
Closed out. So
okay.
individual. Yeah.
Sorry, I misunderstood
Yeah,
that.
that's good.
The thing I need to work on with them is when they are longer trades, when they've gone well, not to close them on a jolly pullback.
Yeah. Yeah,
And
let it
that's-
run a bit longer.
I have to still work on
Yeah.
that. So that's
Yeah, well, that
something
is
to
a
work on.
very difficult thing to do, right? Because when you're in that profit, and it's
You want
kind
to
of
take
coming
loss.
up as stalling, it's so easy just to go, okay, I'll just take that, okay? Just to find it just runs even doubles, triples.
Yes.
I do that as well
Okay,
sometimes
that
as well.
makes me feel better.
It goes, it runs in your direction. You had your original target, you exit, and then it just runs a little bit further. Well,
Yeah.
you made your decision, and that's fine. When you've got your trading strategy or plan, you commit to what you're doing.
Yeah.
Right. All right. Don't change it up too much. The only thing that you should be changing is that stop loss.
Yes.
Let it go to the target. If you decide that's the target because there are a couple of brick walls in front of me, supply demand area, whatever it might be, then take it. You and own it, right?
Yes. Yeah.
What you don't want to be doing is going, oh, shoulda, coulda, woulda,
No.
on it running even further. Yep.
Yeah.
Own what you're doing, commit to the trade that you're actually in.
Yeah.
Here's the other thing is when some guys get into the trade, and I've actually changed, I've say something that when I'm on the live, and maybe some people have done this, is I've gone long, and I've say this is short, right? If you're already in it, don't listen to me, right? You commit to what you're supposed to do, right?
That's
Once
hard.
you're in, you've committed, and you've got to stick with it.
You can't get in your own head.
Yeah, correct. Just manage that stop, right?
Yes.
Because
Yeah.
you've got to keep going on
Yeah.
putting that probability into your favor over a number of trades,
I
not
think
just
I've done
one.
that once too.
You've done it?
Yeah, I've done it once with you. I have learnt from you not to get in front of a steamroller though.
Yeah,
If we're getting a lot of movement, I won't
Yeah.
go both
Yeah,
ways.
yeah.
I'll just go in the direction it's moving.
correct.
Yeah.
Always go in the direction of momentum.
Yes.
Yeah,
Absolutely.
correct.
So,
Right.
Yes.
So
We'll talk. So it was about risk management.
risk management.
Yeah, how you might approach risk on a good day, bad day.
Well, it all
what
depends.
your size
Risk
was
on the day. Usually, I look for 1% a day. As soon as I might hit 1% on my account, I'm out and done. Right.
Okay.
We had, like was mentioned earlier, that we've got to have a reasonable level of prediction of what type of open we're going to get. Open auction, open drive, open test drive, open rejection, reverse. Right. If we've got a reasonable prediction on that, then we play accordingly to it. Right. We all knew that Iran was getting massacred by Israel and US, we know that the market's going to run. So this is the one we're going to hold on to.
Yeah.
Maybe double your stop, halve your size, so widen it up. There's volatility measures that I talk about all the time. How to measure volatility for the day, and really quick rule of thumbs of how to do it. You don't have to sit there calculating it. Keep average true range, doing math on your calculator to try and find what the volatility is for the day. It's very simple, right? And we trade accordingly to that market volatility, right? So risk management does change according to that reason, according to what type of open that we may be expecting, knowing that we might have a news release that's, where the market goes quiet. So we just sell the tops, buy the bottoms, okay? And we have a tighter stop, or, those type of things, okay? So risk management is a little bit, it does have to be dynamic but it's according to a set rules of what type of environment we're in at that point in time, right?
Do you stack more trades if you're having a great day?
If I'm feeling the market, I'll go wild on it.
Okay, you will.
Right? Yep. I will. If it's running, we know why it's running. We're really comfortable. I will take a really good chunk out of it. Right?
Okay, cool.
So even if I'm taking my little one wins, I'll just enter again and then enter again all the way down.
Oh, wow. Right.
Wait for the pullback, enter it again, enter it again, right? Yeah. So I'll still take the little clips, but I'm in, out all the way. Now, if we've got a market where I'm not, or it's hard to read, okay, it's flicking up and down, open auction all the way to the side, I've got stopped out a couple of times. I have to wait until the end of the second TPO block, which is the top of the hour. Okay, wait for the change of the guard. Wait for you to break out of that range. Not allowed to trade if you've got two stops and it's in a range. You're not allowed to trade until it breaks out.
Oh, risk rule right there.
Yeah. Done. Risk rule for everybody there.
Yeah.
Okay. Yeah. You've got to know when to stop, to stop trading. It's not a nice market. It's not going to be nice to you for the rest of the day. The thing that will kill everybody, and every trader who's watching this, who's already been a trader, knows the answer to this. It's Sonia, you're overtrading, trying to recover, knowing that you're in a really shitty area, right? And you've taken a couple of stops, and then you try and recover it in that same time frame, the same, two TPO blocks or 1 hour block, you're trying to recover it. You're just going to mutilate yourself.
That's right.
And I've seen so many traders make this beautiful equity curve all the way up, and one day ruins them. They give it all the way back. Right? They're the days that we have to really be disciplined enough to know that you're wrong, you're not reading it right, so stop. Right? Even stop for the day. If not, at least go for a walk around the block 3 times and kill an hour. Right? And wait for that breakout. Okay? Right? You got that is what makes a great trader.
Definitely.
Right?
Absolutely.
Not how much money you make, is how much money you don't lose.
That's right. We've seen so many equity curves, especially when you're putting people up for that competition, right? You put the equity curve up on the screen, which is basically just a line chart, right? Each day, let's say, if you look at a month, each day, say, representing one day, what you want is you got maybe little up, little down, little up, right? And they all look relatively similar. But the thing is, if you have someone that has a big down and then a big up, what's happened is that's
correct.
They either won't
to recover.
They either won't come up, right, or they will come up. But what you've done is it's so emotional because you've taken such a big dip, and you've tried to recover that by taking extra risk, right?
And in that case, that's not a trader that I'm going to give money to.
Well, that's right.
Right?
No.
Intraday attempts to recover. And they size up, they change their size, pull multiple positions on at once to try and recover themselves after losing maybe 10% intraday, right, is not going to help you, because even if you do recover once, you'll start getting used to it, that's your strategy going forward. And there'll be one day where you just absolutely mutilate yourself. So you'll hand your entire account to the market.
So this is the commonality here, because both of these traders here, right? I mean, even if you've been trading for a year, 2 years, you probably can go, say, a week managing those emotions. Maybe you can go 2 weeks managing those emotions, but on those key days where you just know it's not your day, making sure you don't wipe out, like you said,
correct.
that's
is
the key.
man.
That's the key. So that's the that's the huge commonality there.
Correct.
So huge gold nugget.
Yeah, knowing when to stop. Look, I mean, I had a day a while ago. It was on a paper account, and I looked back at it when I figured out what was going on the next day, and it was totally unlike the way I trade. And I just was enjoying it. I just kept trading. Not like me at all.
Yeah.
And I've been taking this wonderful metabolism enhancer, and tasted great. I had 2 of them, and when I looked at it, it had like 180 milligrams of caffeine. And I was wondering why with 2 of these.
You're off your head.
3 o'clock in the morning, I was wide awake.
100 trades later.
I didn't figure it out until the next day, and I went,
Correct.
that was
Just
terrible trading.
And you can see
what
how.
did I do? And I looked at it and I went, that's not like me.
Yeah.
And I was going, what have I done? What changed? And then I actually looked at the packet and I went, right, okay, that doesn't go near my
And
trader.
it's so subtle, right?
It's so subtle.
So subtle, right? The idea is that we always have to be calm, centered, process driven, right? All the time. You got to check your physical state
Yeah.
when you start.
Yes.
Right? It
And
could be
between
like,
trades.
arguing with your partner. Could be jacked up on caffeine, right? Whatever. But, I always say, don't come home and drink, don't drink and trade, right? Okay. I've said that 1,000,000 times, 100 times. When I was younger, I'd come home from the pub and I'd see a trade. I go, oh yeah, that's right. Yep. Never won one of them.
No.
Right? Because you're confident, you had a couple of glasses of confidence, right? Yeah. So, these are little things, right?
Yeah.
Right.
I think these are the things that the market and the market makers wait for.
Yeah. They
look for.
That's how they profit from you.
Yeah, they're rubbing their hands together. Ooh, he's
It's
tipsy.
nice. Well, the day you had that was very good last week as well. And I pull all the monetary stuff down below the screen. So I'm just with the trade and that's it.
Good.
Yeah.
And between the trades, I was checking how I was feeling, and I was feeling good. And then did another one, and I come up with thought, I'm getting a little tired. And that's when I pulled it up and I said to Richard, I'm out for the day, and I was up 3.5% and just stopped, and that was it for the day. And I'm finding it easier and easier to walk away.
Yep.
And I think that I've probably still got a little way to go, but that definitely I think makes a huge difference.
Because in the end, it's when people watching this is we're not walking away every day.
No,
right?
not at all.
We're walking away one day out of 10.
Yeah.
Right, when it's not kind of fitting. We're not on the ball, right? Our winning days normally for our traders are 80% winning days.
Yes.
Right.
Yeah.
So we're not talking about every time you sit down you're not feeling it or feel something, you get up and walk away. Still got to do something.
That's right. Yeah.
Yeah.
Okay. Well, we can talk about something a little bit more technical. I think there's might be an overlap here into the approach to supply and demand.
Yep.
As
it's very key. Very key.
Absolutely.
Yeah.
Right. That is the matrix.
Yeah.
Okay.
Absolutely.
You both use supply and demand in your trading, don't you? Yeah.
We've just done the seminar on institutional trading order flow.
Right. It was
2 days ago.
Huge topic.
Massive topic. And understanding, remember, the Matrix for everybody else, the Matrix, the movie, right? Neo falls for the first time off the building, but by the end, he can stop the bullets.
Yep.
Right? He sees the Matrix, but once you see it, you can't unsee it.
Yeah.
Right? A lot of people don't see this stuff, but once you see it, you go, oh my God, it's so friggin' there. It's like right there every time, every day. It's right there, right? We just got to know which ones are what. So we could see where the institutional traders go from balance to imbalance to balance, right?
Right.
Okay. But once we see it, right, you can't unsee it. So it makes everything so easy.
So if we just spill some sauce onto the table for the viewers now, how would you
give you the secret recipe?
How would you describe what is supply and demand?
Supply and demand is just the area of
trading
of volume, right? Where contracts go for, a lot of contracts move from bids to ask and ask to bids, right? Contracts swap over, okay? And what that is an area of balance or equilibrium, fair value, where institutional traders will, because an institutional trader can't just go and put a whole heap on the market at once. They'll move it,
Yeah.
right? So what they do is they roll it in there, just little bits at a time, right? And that's an area of supply and demand.
Right.
Right. And once that supply and demand is moved out through an imbalance zone, then it will come back or try and find it again and pick up more liquidity and then continue on in its direction.
Yep.
Right.
So there is some theory behind
There is
the
theory.
technical.
You've got to be showing days and days and days of this because it is slightly different every day. But if we can understand, you've got to see it for about 6 months of me doing it.
Yeah.
Then it will click.
Yeah.
Right.
So you can draw it on the chart. You see it there, but it's not some fairy dust. It's not some line, a random line. It is this you're talking about.
It's not
orders.
an indicator.
You're looking at
looking
orders.
through the
Okay.
price. We're looking through the volume to see where all of that concept, all that is. So now the easiest way to do it, I've got 2 methods of doing it. Fixed range volume profile.
Yeah. Okay.
You can find it. You'll start finding it where all the volume nodes are. They're usually a supply demand areas.
Okay.
And the second one is my favorite, market profile.
Yeah.
Market profile that will show you similarly based on price, where price has been hanging out the most, right?
Yeah.
If you marry those 2 up together, you got your supply demand area.
Awesome.
Pretty easy.
Yep.
Yeah.
You find supply and demand the same way?
Absolutely, and across different time frames.
Yep.
Sometimes if you're coming into an area and you've got a supply and demand area that's on a higher time frame, it's good to know where they are as well. So I'll bring those across onto the chart. But no, look, honestly, that's where they're the areas of consolidation that you're really hoping for it to break out of one way or the other.
Okay. So that's what you're sort of looking for. You're not.
The moves happen.
You're
The
looking.
big moves happen outside that.
Correct.
Although, especially with what Richard's doing too, we can trade within those consolidated areas, but it's a much smaller range.
Okay.
Richard has the skills to do it
Yeah.
very, very consistently. I like a little bit more range than the really tight days.
Yep.
Yeah.
Do you ever expect it to break out of both sides? So fake out of one side and then break out of the other side, or is that not how you play them?
I'm looking for it to go one direction or the other, and I'll be looking at the higher time frames
Okay.
to, as a support or rejection of that as well. Yeah.
Cool. And you're looking at higher time frames and for support.
Yeah, well, you've got. I mean, you get the better trades when you get a stacking of that of supply and demand.
Yeah.
So you can have a supply demand sitting in a higher time frame, and then you get matching on a fractal or pivot type supply demand area on a lower time frame, and you get very clear entries. We can literally pick the whole swing from where it's initiation all the way through to its new balance zone. We can pick every single top and bottom.
Yeah.
Wow.
That's crazy.
That is crazy.
Yeah.
Yeah.
And you've seen me going.
Absolutely.
So it'll start here and it'll go to there.
Yes.
And it just does it.
Yeah.
Right? And then everyone's going, how do you do that? I just showed you how I did it. Right? Right.
Yeah,
So,
it does sound pretty crazy.
But once you see that and you understand that, then you can really then what you're doing is you're seeing what all of the big guys are looking at, because it's not secret sauce, right?
No.
It's not a secret recipe. This is just what the big players are looking at,
Yeah.
because they're not looking at retail type of things. They're not looking at an RSI or a MACD oscillators. I think they should just ban them altogether. Moving forward, should actually make it illegal to have oscillators on a chart going forever. Right?
Yeah.
It's just an interpretation of price.
We'll start
it's not going to tell you anything.
Right on the street.
All right. So it's not. We're looking at what all of the real traders are looking at, and once we know what they're looking at, then we just do exactly what they're doing.
So because they want to get, like you said, the volume in. So they're looking.
They need to get that volume in there because they've been told to do it by their managers.
Yeah.
Right? These guys are big whales, right?
Yeah.
And they can't just dump it all at once. They'll move the market. They're not interested in doing it.
Yeah.
They want to get it at a level, slowly put it in, and then they'd move it through to the new level and take it all off.
Yep.
Comes back down to that level. They buy it all again, and it goes back up.
Yep.
It's pretty simple.
Yeah.
Awesome.
There might be some movement tonight. Oil's gone to 111.
111. I did see that.
Yeah.
What did I say on Monday last week?
You said take a trade, go long.
I said, this thing's going to go to 110.
That's what you said?
Yeah. 1 week ago, I said exactly that.
Yeah. Well, I know 1 week ago you were saying, you were calling me, we had a call in the morning, like, I just went long on oil, I think.
Is it, mate?
Yeah.
But I was going to add to it this morning thinking that it was going to go from, because it was 90 on Friday close, and it's $20 pump gap over the weekend.
Over the weekend.
Because, they're
All the
hitting the
bonds.
oil refineries now.
Yeah. Mm-hmm.
So I was going to go long and put more on at 90 if it opened up around about that 90 mark, but the thing's gone. I reckon, mate, if this war keeps going, they'll keep doing the refineries. We'll see 120, 130.
Yeah.
And that'll be peak, right? There's only one other time it was at 130. That was probably about 10 or 15 years ago. And nobody thought it would get there. But for everybody, if you miss this, don't stress, right? Because when this war ends, right, the thing will drop back down to 60.
Yeah.
Right?
That's
so you
right.
can sell it.
Yep.
Okay.
That'll be another really good opportunity.
It will be. So just wait for the end of this, which, I mean, we're only a week into it.
Mm-hmm.
Just give it a couple of months, see what happens, and then sell the crap out of it.
Awesome. Wow, that was a great segment on supply and demand. And I think everyone now will be a little bit excited to learn it. Just maybe if we can give somewhere to start. Is there a book in supply and demand or a resource we can recommend to start, just the level?
Well, just the level. I mean, there's plenty of YouTube out there on it. But, university YouTube, this is the risk, right? If you want a couple of books here, I've got Stottlemyre here. That's a good book on market profiling.
Okay, which is a key tool that was used for supply and demand.
Correct.
Yeah,
and this is volume profiling in this one. Okay. Can you see that on the camera?
Just move your fingers.
All good.
Volume profile.
Yeah.
Volume profile there. That one. This is a reasonably good book.
Awesome.
There's another one called Market Profile by Dalton.
Okay.
Dalton. I didn't bring that one. I think I did it on the last podcast. I showed it.
Okay.
You can read those books. The second thing is what I want to say is the risk of people running over to YouTube. Okay. YouTube does have some good content, but it's got a lot of not necessarily misinformation if you get it right, but there's a lot of stuff there. But what's missing for a lot of people is how to put it together.
Yep.
Right. Yeah. Watch somebody else do it. Remind them of what's right and wrong. Right.
Mm-hmm.
It's okay to start learning there, but what you really need is how to put that together and being held accountable, reminded of the things that you're forgetting, because there is a lot of stuff.
Yeah.
Right?
Perfect.
Yes.
That's okay. Well, as long as people have a place to start, I think they can start, getting their feet wet. That's great.
Yep.
Cool. What about journaling and reviewing your trades? Is that something that I think we can talk a little bit about how you do it?
I use TradeZeller.
Okay.
I'm trying to use another program as well, but I'm on a Mac, which isn't really ideal for trading. Sorry, Richard, I know. I've got too used to them now. So, yes, TradeZeller is excellent, and you can import. It just does automatic imports, so it just puts everything up for you. As I'm going, the thing is, what it doesn't do is I screenshot. And this is with the longer trade, so anything which is going to take, a few minutes, I'll screenshot. What I do find hard is actually taking my focus off the trade long enough if I'm doing trades which are really fast.
Yeah. To
then go over and get the tool and grab that and put that aside. So I tend to then just focus on the trade.
Yeah.
But yeah, so TradeZeller is excellent.
And
it's been really good.
Has it helped you develop as a trader?
Yes,
or is it
because
just
I
nice?
go through them. No, I go through them.
You go through them?
Yes.
You do review?
Yeah, I go through them.
Okay.
And I think you probably get more from going through them, and also from, I think, really recognising what you're doing and what you could do better.
Right.
And I don't know if everybody does it, but I know that I'm still working on holding trades for longer.
Mm-hmm.
I mean, that one I mentioned to you where I took it off, I was well in profit, but it was actually at a minor level.
Mm-hmm.
And as it started retracing, I closed it. And
it just kept going.
Well, no, it didn't.
It
didn't. And this was the thing. I looked at the clock. I thought I'd better go and get dinner for everybody.
Mm-hmm.
I went and got dinner, and it had gone up, and then just gone straight back down to my original second level target.
Yeah.
But I looked
when it went up like that, it was going from supply demand zone to go pick up more liquidity.
That's right.
That's why it went straight back up to get more liquidity after that open, and then it would have gone straight back down.
That's exactly what it did.
Right?
Yeah.
Yep.
And I looked at it and I thought, well, if I was there, Yeah, I probably would still have closed it and then just waited. And when it started, after I picked up the liquidity, set another sell order in and let it go again. So, but there's some stuff like that that I'm still getting a handle on. And also with the longer trades, I'll put a stop loss in place and then just leaving them rather than rather than closing them out too early or anything like that.
Yeah. Perfect. And Richard, for you, I know it might be a little bit different now, but as a developing trader, was reviewing trades an important part of your process?
Massively important.
Okay.
Okay. The thing is, and I've said this before, as a human, all primates, you cannot remember detail of anything. Okay. Think about a movie you saw 6 months ago. If I asked you what was good about it, you could only answer two things: how good it was and how it ended. Right? Now, you can only remember maybe the last day of trades. If I asked you about a trade or the key ones, right? But if I'd ask you about a trade that you took on a Monday 3 weeks ago, there's no way you can remember it. It's important to keep a journal so you can, for two reasons. One, isolate each strategy to see which ones are working, which ones are not.
Okay.
Yes.
So you can see the performance on each strategy. And TradeZella is good for that. EdgeWonk is good. There's a whole bunch of these things out there. We're actually going to be developing our own soon, where you can isolate your trades per strategy. You see, okay, well, my FTV WAP or my Lorentz regression line trading, it does way better than whatever other trading that you're doing. So cool, I'm going to eliminate some of them and stick with the best ones, right?
Yeah.
So that's very important. The other thing about recording, okay, is to not just do the strategy, but also you see your overall performance, right? Even writing down your emotional state, right, to see what key things are going wrong for you on a trade because of your emotional state, your mindset, right? But it's also, and this is, I 100% agree with this, Tom Hoogards talks about it, Jared Tendler and Steve Ward talk about this as well. These are good big psychology guys who are traders as well, is about preparing yourself by having all of your A-class trades, the images of all of your A-class trades, and all of the images of your painful, regretful, never want to see ever again type trades. You've got to collect these images, right? So that when you prepare yourself just before you start trading, you go through each one.
I love that one.
You go through each one. And then, some people, a bit dicky, but it is a form of meditation, right? You've got to get yourself prepared. So, okay, that worked, right? Before you start. So as soon as it happens right in front of you, bam, you don't even think about it. Okay? That's intuition. You've got to practice. You've got to actually see yourself of what your behavior will look like if you're an A-class trader. And you've got to do that every time before you start trading. How does an A-class trader look when he's trading, him or her, sorry, him or her is trading, so that, so you go, okay, I'm going to take the trade without hesitation. These are all the trades that have worked for me really well in the past. So as soon as the market opens and you see that trade, you take it without any hesitation whatsoever, and you'll find that it works, right? Now, when you become really, really good, you don't have to do that all the time. But when you're starting off as a trader, you've got to do that. So you condition your mind into how to behave. Right?
Awesome.
So journaling, absolutely. See performance, over global performance and individual performance, right? You remember the trades, collect your images, okay? So that you've got folders. Here's all my supply demand folder. Here's my VWAP touch folder. Here's my Lorentz regression line folder. Here's my double top, double bottom head and shoulders folder. Okay. Here's my ending diagonal. Here's my this folder, that folder, all of the different folders, right? So that you can just remind yourself all of the time. Condition. And you'll find how quickly you become a really great trader. If you do that, right, you'll become really good really quickly. Okay. The guys who don't become good quick enough don't do any of that stuff. They just trade, make it an individual assessment, ad hoc, whenever, whatever, and they wonder why it's taking them 10 years.
Yeah.
Because they just go, the market's not giving me what I want because I've forgotten about all of the perfect trades that I've done, even though they still have, maybe the market condition isn't right. They strategy jump or they go chuck in the towel,
Yeah.
you know, things like that. Or they go and change their size and start gambling with it, right?
Yeah.
Yeah.
They're not training themselves to become a great trader.
No.
Okay. So it's very important to be disciplined enough and even put down all those terrible trades that you want to forget about, right? You can't forget about them.
Yeah.
Right? You've got to remind yourself what not to do just as much as what to do.
Yep. All right. Awesome.
All right,
So for
cool.
the traders, again, that segment was awesome. I mean, we've got some similarities there. Again, really good overlap between two traders that are doing really well, that have, highlighted the importance of journaling. So, we're doing our best here to not hold back anything. That's obviously completely unfiltered, and, you've learned everything you need to learn there about how to journal properly. So if you want to take action on that, I would say the thing to do is to maybe watch that section again and write down exactly what Richard and what Sonia are doing in terms of what they are journaling. Make that list for yourself and, hopefully see the result in it with your own trading.
The other thing which I do, which makes a huge difference to me, is I screenshot my trades and I send them through to my mentor with the reasons that I took them and quite often, why they didn't work or why they worked. And it's really good to be able to go through those, and it puts them into perspective as well.
Yeah.
I mean, I've had trades that I thought were really good, and he's gone, yep, it's really good, but if you do this and this and this, you could have got
a different outcome.
And it's the difference between, speaking to somebody who's been professional for many years and somebody like myself who's at the beginning end of that stage of things.
Awesome.
So, yeah, that makes a huge difference.
There we go. Well, now we're combining a lot of the other things that were spoken about today, not just the journaling, but combining that with the community. You combine all the things that we're learning today. This is about what, again, makes traders really good traders. So really, really good. Awesome. And the next kind of leading on from the discussion talking about journaling is other things that progress your advancement as a trader, going from starting as a beginner, going to intermediate. But I think anyone that's developing as a trader, and like success in business, a similar thing. It's not linear. You're going to see some progression, or you might even be flat, or you might be losing. But at some point, it's going to start going vertical. So, there are going to be certain things that are going to tip you over that edge and make you profitable. It's going to make you more consistent, or it's going to, whatever it is. I would love to know what it was for you, Sonia, and then we'll go into Richard, some of those things that really moved the needle for your development.
Mentoring and increasing the mentorship.
Okay, so more
huge
support.
Shout out to Richard and to James with that as well.
Yeah.
And to be honest with you, I mean, traders who have been going for years and years and years will still have a mentor or somebody they can bounce ideas around with. And I think it's something which will hugely shift things. Our brains love linear growth and progression, right? So we love learning a little bit more each day and progressing in a linear way. I don't think trading live is like that. So before you start, when you're learning, yes, you can start devouring information, you can get more and more. But when it comes to the point that you start trading, it's up and down. It's up and down. So I feel that you need resilience. And that's probably something which, if you can bring that from any other life experiences through to the trading and know that it's not going to be a 5-minute journey.
Yep.
It's going to be, there's a lot of detail. I know when I first started on my own, I thought, cool, buy down here, you sell up here.
Yeah.
This can't be too hard. And it's not like that.
The old trick, buy low, sell high. Yeah.
It's got to be easy.
Yeah. So your progression was like that. It did actually grow exponentially as you started to really with the mentorship.
Yes, absolutely.
Okay.
Yeah, right
awesome.
Through. And
anything else?
Yes, definitely going through trades.
So the process.
Getting off the kitchen table.
Yeah.
I built a trading hut and all I do in there is trade and it's really well set up.
Yeah.
And it's a quiet space. Nobody disturbs me. Even if the house burns down, I said, don't don't disturb me.
Yep.
And
No, yeah.
it's been great. I've got,
Focus.
a lot of support as well.
Mhm.
My husband's wonderfully supportive. He couldn't care less about trading, and he's supportive whether I've had a winning day or a losing one. It doesn't matter.
Yeah.
It doesn't matter to him. And that's actually quite nice because you just reset.
Okay. Awesome.
So
the support, the mentorship, the journaling, and
The environment.
And the environment. Okay. Awesome. So that's the sort of success recipe there for you. Awesome. What about for you, Richard?
Tried to do it on my own when I started.
Yep.
Terrible.
it's hard.
Very hard.
Yep.
But everything that Sonia just said, exactly.
Same thing for
Nobody
you.
talks to me while I'm in it.
Okay.
Nobody comes near me. No dogs at my feet.
Yep.
I do it from the office sometimes, from home sometimes, but I've got my office at the front, doors closed.
Yep.
Strong internet connection, etc. Okay.
Yes.
I'm at the stage where I don't have to journal anymore.
But when we're talking about advancing.
But for the younger guys out there, 100%. When I was younger, journal everything.
Yeah.
The worst ones was all the terrible days.
Yeah.
I've made myself do it. I had my 2 mentors as well.
Yep.
I learned way more with the mentors than I did trying to do it on my own.
Yep.
But like I'm a dog with a bone. Right?
So am I.
You've got to get, you've got to be committed to it, right? You can't half do it as it can turn into a side hustle, but you've got to do the hard work at the start. It's just, you can't not do it. Okay.
Yeah.
And you can't be bamboozled by, these 5 easy steps will make you a millionaire. It just doesn't happen.
Yeah, that's right.
Okay.
Tell me where you find them, Richard.
Yeah, correct. Don't get bamboozled by, shiny objects type of thing.
Yeah.
Okay?
Yeah.
You've got to get little bit obsessive. You've got to be, got to have a reasonable technical, willingness, right? You don't have to be a math whiz.
Yep.
You can do it, with grade 9 math.
Yeah.
Right. You just understand probability and how to use a couple of simple operators in Excel. That's it.
Yeah. Yep.
It's not hard, but you've got to write down everything that I'm saying. You've got to write down, you've got to read the books. You've got to do all of the work. Now we've got a guy who won 2nd place in this competition, right? A year and a half ago, he was absolutely terrible, right? Now he's gotten 2nd place and I'm looking at funding him.
Yeah.
Right.
Wild.
It's that acceleration is pretty quick.
It's really good work
to learn how to be a good trader, right?
Yes.
But he's knuckled down. He turned up to everything. He's read the books that I've said for him to read. He's rewritten my course in his own way. He's found, he asked me the questions all the time, right? And you're trying to discover that for yourself will take you forever, right? But if you just ask somebody, then it takes you, you got the answer.
Yeah.
Right?
Doesn't skip the work, but at least puts you on the right path.
Yeah, it makes you go quicker, that's all.
Yeah, cool. So there you go. So it's not about, you don't need to be, like you said, you don't need to be a math whiz. You don't need to have some special background.
No.
That has always been a recurring theme.
I've got guys who have left school at year 10.
Yeah.
Boilermakers, FIFO workers.
Yeah.
Guys who are tradies, not to say that, tradies, being a tradie at the moment is probably the best employment you can have because it's so in demand. But, you don't have to be, some special, PhD that's done economics. You don't have to do that, right?
No.
Right.
But you can't skip the mentorship. You can't skip the reviewing the trades. You can't.
You got to learn.
Yeah.
Right. It's like anything. If you want to be somebody,
yep,
you've got to learn how to do it. Right? It doesn't fall in your lap.
Okay.
Right? But it's about how quickly do you want to do it.
Yep.
Do it on your own, you'll take you 10 years.
Yep.
Right?
Yep.
Do it with a mentor, it'll take you 2.
Yep.
1 to 2.
I love that, sort of piecing it all together there, which is really good. Maybe if we can chat a little bit about, the next step for you, Sonia, is not only increasing your size, but maybe even looking at funding. I know that was a topic of discussion again that we've chatted about before. Richard, obviously you're looking at funding traders.
Yep.
What do you think Sonia needs to adjust with her trading to not only just be a profitable trader as she is, but being prop firm ready?
Well, the condition when you're wanting to get funding off me, I've got to know you, right? Because I trust you. We're not an online prop firm where you pay money and you get paper trading funding, right? Where those guys, their business model is wanting you to lose.
Yeah.
Right.
Different model.
We're on the other side. We take a lot of traders. We select the top ones.
Yep.
Right. The step is yes, do your learning. Come and watch me trade live. Get used to it. Have a go yourself.
What's left for Sonia?
What's
Stop
left for
using
Sonia?
Mac.
Come on one-on-one so I can actually dissect every single thing that she's done.
Okay.
Right? I need to know her macros, and even send me your trade Zeller so I can log in and I can start looking at it so that I could see what's going right, what's going wrong, improve on all of the little bits that are going wrong.
Okay.
Right? So we're stepping up the accountability side of it, do the competitions now.
Yeah.
Right, going forward, so that we can see what your performance looks like. And once that, if you win, if you're up there on the competition, you come closer.
Yeah.
Right, we start nailing it, like all of the little nuances that what we expect, what we don't expect. Start that little bit of pressure, keep increasing the pressure a little bit.
Yeah.
Then I start putting a small account in front of her.
Yeah.
We'll see how that goes. And if she doesn't do well, it doesn't mean you're out.
Yeah.
It's okay, cool. Let's go back. Let's try and fix that problem.
Yeah.
Right. And then we just start building it up from there.
Yep.
Right. It's not, you've done well, or you say you've done well. This is not how it works.
No.
You don't go, I think I'm a great trader and I know that I'm a good trader. Can you give me 100,000 US?
Yeah.
No.
Don't email
Not
Richard with that.
That's not going to happen. Right? But if you want to become really good at this, then it's a progression.
Yeah.
Right.
Cool.
Yeah.
Awesome.
I see you trade now. I think I've still got a little way to go
Yeah.
in terms of being really comfortable to know I can do what you're doing.
Yeah.
today.
Well, in that case, it's, let's just dissect some of the trades that you're doing, fix up a little bit of problem, then start showing me your account,
Yeah.
right?
Yeah.
How do you feel?
You put the spotlight on you.
How do you feel
I'm
about
happy
having
to do that?
Yeah.
Yeah, it's the MT5 thing that
Yeah, well, we'll
stuffed me.
we'll
So
sort,
I won't
we'll
use
sort
just
something
one.
out with you.
Yeah.
Yeah, I battled with it for about 5 weeks. I think I'm too much for Mac user,
Yeah.
too long in the
Yeah.
tooth. So trading view is good and interactive.
All right.
But
Well, how do you feel about having someone look at your trades that closely?
yeah, look, I don't mind. I mean, I already put mine through to James, and I expect them to be,
Yeah.
and it's good because that's what I learned from. With these ones, I almost need to just grab a quick screenshot and then afterwards look at the
Entries and exits.
look at the entries and exits and put them in afterwards because
Yeah, well, some
it's so
guys,
quick
yeah,
sometimes.
it is
my
quicker
part.
and there might be a lot more trades, but what you
Yeah.
can do is you can take the end of day screenshot.
Yes, okay.
Yeah, end of day is enough.
I think I've put some of those through. On the account I'm using, the Fusion one, there's no option other than to have the money up on that.
Yeah,
So I'm happy to send them through,
yeah.
but I'd probably be best to send them direct because they do have all that up there. But
Okay, awesome. All right, everyone. Thank you for listening to another podcast with Lepus Proprietary Trading. Thank you, Sonia, for coming on. Thank you, Richard, again for another great discussion. Now that we're reaching the end, guys, if you did like the content, we love putting these out, but it really does help if you at least like the video or even subscribe to the channel. YouTube seems to reward that quite a lot, so it does help. Doesn't take long to do, so if you could do that, please follow along. And we'll look out for some more content. It'll definitely be coming very shortly, so thanks for watching.